all that stuff we've been collecting, right? Okay, here are the requirements. They don't just let us keep that money and not pay the government. The reason I'm telling you, these people that do have employees and don't pay them, they are going to get in trouble eventually. And that's what reason most small businesses get shut down is for non-compliance with their tax purposes. So, the employers make the tax deposits. In other words, we collect the money, right, from the paychecks, put it in that little payables account, and we collect it up, and then we send it. We collect income tax. We collect their the employees, the Social Security, the Medicare. We collect. Then we put our part in there too. The employer puts the employer's part of the. They match it. We match the Social Security and Medicare. So all that goes in those accounts that are shown as payable that have to be paid to the government. Okay, so effective January 1, 2011. Wow. All employers, regardless of size, must remit their tax payments via the electronic system. So they're not going to take paper anymore. They're going to have them do it on the computer. And that was effective this year. Okay. So, now, how often we have to send in those payments depends on several things. The amount of the tax liability, the amount reported in the look-back period, which is a period of time we look back to see how much we owed in prior periods. In this textbook, we're just going to use $2,500 as our tax liability threshold. So, that's the number we're going to use, just like we chose something for our Social Security and all. Okay. The look-back period is a 4-quarter period ending on June 30th of the preceding year. So when they start looking at when they have to pay, they look back to January 30th of the preceding year. Those are the quarters they look at. Okay. It's just like a formula. You've got to look back during those quarters, okay? All this is law. And you just really, again, you need to read it very carefully because it gives you each little requirement. So, if the amount owed is less than the $2,500, then the business can file quarterly. Okay, they can send their form in quarterly or electronically send it quarterly. If they don't owe, if it's not less than $2,500, then they got to look at these other formula or requirements to see when they have to send theirs. When do they have to report it? All right. So, if the amount reported in the look-back period is equal or less than or equal to $50,000, then less than or equal to $50,000, he can pay it monthly. He can submit monthly. That's the amount he owes the government for all those taxes. He can submit it monthly. Okay? And I don't really want to go into all this because you're not going to remember this. They don't want them. Well, yeah. And it's wise because, well, for one thing, the government wants the money to draw interest on it. Just plain and simple.
That's it. They would, so we don't draw it. That's right.
And so you don't. The company don't draw it. They want. You're right, John. Connie. So if it's more than $50,000, guess what? They're going to have to pay it every other week instead of monthly. So the higher the amount that we get that we've withheld, the more often they require the payment. Okay, so that's just to new employers with no look-back period, brand new. If the amount owed is $2,500 or more, then they're due under the monthly schedule, new ones. Then if it reaches $100,000 or more on any day, they get $100,000 or more on any day in those accounts where they're collecting taxes. It's due the next banking day. So they don't let them keep it at all. You collect it the next day, pay your payroll, turn it in. You pay your taxes that you've withheld.
Secrets,
Yeah.
aren't they?
Yeah, gets pretty, gets, yeah, oh yeah, I gotta pay them, yeah.
The further we get in this accounting class, the more it makes sense.
Yeah, I know, oh, that's why they did that. Okay, so, remember, both the employers and the employees pay both parts, right? So, when you set up your taxes, you're going to be sure that you set up, we're going to set up the employees part when we set up our payroll, right? It's shown up as a line item. Well, we have to do a special entry to show the employer's part. So the other entry that has to be made is the entry that shows the employer's part of matching those taxes. Okay. All right? Okay. And the employer shows it. The entry is going to be a debit to payroll taxes expense. Let me go back. It didn't show the entry, but the debit's going to be to payroll taxes expense because it's an expense to the employer. And the payables go out to the government. So he does get to count the part that he has to pay for the employees as an expense, anyhow. Okay. All right, so withheld, matched, total, Social Security, Medicare, federal income tax. Of course, the employer does not match the federal. That's the person's responsibility. And so then it shows us a total of how much we would have to submit to pay. Add it together, all those payables, and that's how much we have to submit to the government. Okay, so if we make it a deposit, we show a debit to each one of our payables when we have it set up, and then we show the credit goes to cash. All right. All right. At the end of each quarter, we total up our individuals' earnings, everybody that's gotten paid. The 941 is a form. I believe there's one in your book.
Page 371.
371. All right, there it is. Again, I'm pretty sure these are all going to be done electronically, but we've got it in our book so we can look at it. And the 941 is due the last day of the month following the end of the calendar year. So January, February, March would be due the end of April. Okay. And then if the taxes for the quarter were deposited when due, then we can, for the prior quarter, then they give you a little break. You can take 10 more days next time. Okay. If you have deposited those regularly each month or as you did your payroll, then you get an extra 10 days to send in the form. That's all that amounts to. Okay, so then we complete the form, which shows a total of what we've collected, how much salaries were, all the taxes that we've collected, right, and how much we've paid. Then we figure it out again using the whole total of everything. And now, as you're doing it on a payroll basis, you're doing it per paycheck. But when you do it on this form, you're doing the total all clumped together, and sometimes because of rounding errors, there may be a slight discrepancy on how much you've actually paid and how much you owed. So there is a line that allows you to make an adjustment on your form for rounding errors. Okay, notice once you finish line 15 and line 10 must be equal. Line 10 is what you figure when you multiply it out and did your multiplication using the
Total
whole
after
amount.
all the adjustments. Yeah.
Right. And then let's see, that's line 10 total after the adjustment for the advance. I see. Okay. Then on line 15 shows what you actually collected and paid so far, deposited. So those two numbers must match. If they don't, because of rounding errors when you're doing this, you get a different rounding amount if you multiply your 6.2%, let's say, times the total in one clump right? Because as you do, if you do 5 different figures and then add them together, so you make your little adjustment there for rounding errors. Let's see where you do that. I think you do that right there. Again, I'm pretty sure these are all going to be done electronically, but we've got it in our book so we can look at it. And the 941 is due the last day of the month following the end of the calendar year. So January, February, March would be due the end of April. Okay. And then if the taxes for the quarter were deposited when due, then we can, for the prior quarter, then they give you. Okay. If you have deposited those regularly each month or as you did your payroll, then you get an extra 10 days in the form. That's all that amounts to. Okay, so then we complete the form, which shows a total of what we've collected, how much salaries were, all the taxes that we've collected, right, and how much we've paid. Then we figure it out again using the whole total of everything. And now, as you're doing it on a payroll basis, you're doing it per paycheck. But when you do it on this form, you're doing the total all clumped together, and sometimes because of rounding errors, there may be a slight discrepancy on how much you've actually paid and how much you owed. So there is a line that allows you to make an adjustment on your form for rounding errors. Okay, notice once you finish line 15 and line 10 must be equal. Line 10 is what you figure when you multiply it out and did your multiplication using the whole amount.
After all the adjustments.
Right, and then let's see, that's line 10 total after the adjustment for the advanced calculation. Okay, then on line 15 shows what you actually collected and paid so far, deposited. So those two numbers must match. If they don't, because of rounding errors when you're doing this, you get a different rounding amount if you multiply your 6.2%, let's say, times the total in one clump, right? Because as you do, if you do 5 different figures and then add them together, so you make your little adjustment there for rounding errors. Let's see where you do that. I think you do that right there. Where do you do that? It shows a place to do it. Well, it should show a place to do it. Adjustments should be on there somewhere. Let's see if it tells us here. It doesn't say, but if they're not the same, you have to adjust them to be the same. This is after adjustment. You used to, they had a little line on there that said adjustments for rounding. Whatever shows up on this front page where you multiply it times the total is the amount you have to be sure you have paid. So you would, if you had paid a few cents more, you just need to adjust your, if you did pay a few cents less, you probably have to send them in that money. If you didn't match it up exactly.
If not, they're just going to keep it. And it's
If
the
not,
other way
they'll
around.
just keep it. I mean, I don't, anyway. Has to be the same. And that didn't show on here. I did not see where they showed the adjustment on that. All right. So then at the end of the year, what do? So everybody can pay their taxes. We have to prepare the W-2 for each person. Yep. Then we have to do a W-3, which is the transmittal form that takes everybody's W-2s, adds them all up, sends them to the government. So they got a copy. Send all your employees a copy so they can do their taxes, and then the government has something to compare it to. These are very critical, too. We used to have to do them on typewriters.